Hey, so today I'm going to give you a crystal ball to understand with 98% accuracy what's going to happen in the future to the stock market and to the crypto prices and to Bitcoin. And you should be thinking by now, like, BS, how can you have a crystal ball and predict with 98% accuracy of what's going to happen to the stock market? But no, no BS. I'm going to back it up with the data, with the charts, and by the end of this video, really, if you understand this, you will be doing very well in the long term. So let's jump straight into the charts. And what I want to start showing you is the correlation between the stock market and the M2 money supply. M2 money supply is basically the entire circulation supply of US dollar. And I want to start by showing you this chart here. So what we have here is the S&P 500, the 500 biggest companies in the US. And I can add here the US M2, so the money supply in the US. And what you see here is that this line is highly correlated with the stock market. And why is that? Well, because when the Federal Reserve prints more money, part of that money will end up in investable assets. And this is also what you need to do to protect yourself against inflation. Because if you are not investing, you are literally losing money to inflation, to this invisible tax. And I have added this correlation coefficient here. So this line, this blue line here that you see at the bottom, is the correlation coefficient of the last 10 years between the S&P 500 and the M2 money supply. And the correlation coefficient is 97%, okay? 97% correlated, the money supply and the S&P 500. So you know by now that as long as the US, the Federal Reserve, keeps printing money, the stock market will go up, okay? And throughout history, as you can see, since ever, they have been always printing money, except for the last 1.5, 2 years, where you have this decline here, right? You have the quantitative tightening. The Federal Reserve has been increasing the interest rates, and it's much harder to get loans, and there is less money circulating. But this is going to revert very soon. So I think you can already see where I'm going, but I've spent a lot of time doing some regressions and doing some calculations and trying to correlate it even more. So as you can see here in this indicator, we have a 97% correlation, right? The correlation coefficient here at the bottom. But I also made some regressions and lagging to try to understand what's the lag between the M2 money supply increase and the S&P 500 moving. And the best lag I could find was an 8-month lag. So typically, the stock market will lag a bit behind the M2 money supply increase because, well, it takes time for people to invest this money, of course, in the stock market, and then the prices go up. But the M2 lag 8, it gives me, this regression gives me 98% correlation, 98%. So you can really predict, you can see here in this chart, you can really predict very well the observed S&P 500. I put the real prices with the prediction model that we built with these charts. And now at the moment, in fact, the prices, the S&P 500 prices, the prediction, they should be actually 11% higher than what it is at the moment. So this goes a little bit against everyone that is calling for a crash in the market. I know that the market should probably have a correction, and we have been seeing that in the S&P 500 has been correcting a bit. But according to this model, and as you can see, the model has been working since 2010 here in this chart. According to this model, we at the moment, the S&P 500 price should be actually 11% higher. And I'm talking, of course, about the S&P 500. This is not individual stocks. These are the 500 biggest companies in the US. And I also want to show you the correlation between these and Bitcoin, because if you are watching this video, probably are interested in crypto. And I also made some regressions correlating the S&P 500 market cap and the Bitcoin market cap. So we know now that the S&P 500 is 97 or 98% correlated with the M2 money supply. And by showing you this one, this regression here, I'm showing you that the R squared is 0.88, meaning that the correlation is pretty much 88% between the Bitcoin market cap and the S&P 500 market cap. So if the S&P 500 goes up because the M2 money supply is going up, the Bitcoin market cap will also go up and the Bitcoin price will also go up. So I made some calculations. I'm in the middle of some calculations, but I predict that if the S&P 500 doubles in price, so it goes from the current 4,500 points or how much is it at the moment? 4,300. If it doubles, the Bitcoin price will actually do like a 10x because the Bitcoin supply is very inelastic and it's much more sensitive to market cap variations. So this is basically to show you that this is all highly correlated. This is the Bitcoin chart. And if I put here the correlation coefficient between Bitcoin and the S&P 500, the 10 years correlation coefficient, according to here TradingView, is 90%. So very similar to the 0.88 to the 88% that I have calculated in my regression. So the math makes sense. We know that the US will continue to print money. All the countries in the world continue to print money, continue to debase the US dollar, meaning that this money will flow to investable assets, especially the stock market, especially crypto. So basically, this is the crystal ball. The crystal ball is telling you that as long as the US keeps printing money, the stock market and Bitcoin will continue to go up. And there is no other way around. Of course, in the short term, there is a lot of volatility. It might go up 10%, it might go down 10% or 20%, and so on. But in the long term, these assets will really outperform, will perform really well. Okay, so let me show you here one or two more charts. So here, this is the S&P 500, right? You have this top here, right? We have this top and this top. And it seems that the stock market is growing, right? Against the US dollar, right? If you compare it to the US dollar. But if you put this chart is basically S&P 500 divided by the M2 money supply. In fact, the stock market is not going up that much. It's barely protecting you against inflation and against all these money printing. So this is the 2020 top, and you see the differences. Basically, these same tops that it seems that the market is really going up a lot. No, not that much. It's pretty much the same if you discount for the M2 money supply. This means basically that if people are not investing their money, actually their money is going down the toilet, right? You need to invest the cash that you have, you need to invest your savings just to protect yourself against inflation, against all these money printing. Because yes, if you look at the S&P 500 charts, it seems that the stock market is going up, but when you discount, when you divide it for the money printing, it's actually not going up that much. You really need to invest your assets. But there is one asset that is even better absorbing the M2 money supply than the S&P 500, which is Bitcoin. I also invest in the S&P 500. This is not financial advice, do your own due diligence. But basically, if I add here Bitcoin to this chart, you see that Bitcoin price, yes, very volatile, goes up and down a lot. But the performance compared to the S&P 500 is also way better. Of course, in this case, to compare to the M2 money supply, I'm using the S&P 500 because we have much more historical price. We have much more historical data. As I show you, Bitcoin in the long term is 90% correlated to the S&P 500, but in the short term is not actually that much correlated. So if I put here, let me put the correlation, for example, for the last 30 days. Okay, last 30 days, at the moment the correlation is 75, but a few days ago the correlation was actually negative. So sometimes, as you can see here in this chart, there is a negative correlation. We have here negative correlations, right? Meaning that sometimes in the short term, Bitcoin is not really correlated to the S&P, but long term is definitely highly correlated. And this is how you can predict the prices of the stock market and the prices of Bitcoin. And this is basically your crystal ball. All the countries in the world, US, China, Europe, they all continue printing money. And they are debasing their currency. They are increasing inflation. And if you just hold on to these pieces of paper, you will lose it because money devalues. Stock market, Bitcoin, they are an edge against this because are the people that understand how money works that will benefit from this. Because if you are just holding into cash, this cash is going to zero. You see what's happening in Argentina, over 100% inflation. US is no better. It's just less worse than Argentina, but the same thing is happening. So instead of having your money in US dollars, you need to have your money in investable assets, in the stock market, in the S&P 500, in crypto. Diversify your portfolio. You need to make sure that you're also a long-term investor because we might have a recession. We might have a stock market crash. But all these things are short-term things because when you look at the very long-term charts, so let me put here the maybe 3 months, and we squeeze these, you see that the S&P 500 pretty much always goes up. You have here the 2000 market crash, the dot-com bubble crash. You have here the 2008 crash. But what are those crashes compared to what the market already recovered after that? And the market always recovers because, again, there is too much money printing. So yes, we might have bear markets, we might have stock market crashes, but in the long term, the stock market will always go up. And again, look at the M2 money supply, look at the correlations between the M2 money supply, stock market, and crypto to understand. And with this, you can sleep well at night. You don't need to be like trying to time the market or anything like that. So don't let them debase your currency with all the money printing. Get rid of this and invest in investable assets, stock market, crypto, and you can sleep well at night. It doesn't matter if in the short term the prices go up or down, because if you are diversified in the market, the prices in the long term will always go up because governments are addicted to debt and addicted to printing money. All right, that's all for today. I'll see you on the next one. If you enjoyed this video, like it and subscribe, and check the links in the resources section because I post a lot of content on Medium, on Udemy, on my Twitter. So follow me to get more cool content about crypto, about investments, and so on. All right, I'll see you in the next video.